Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. The death toll due to coronavirus rose to 425 with over 20,000 confirmed cases in China. The Kerala government declares coronavirus epidemic as a state calamity after a third student tested positive in the state of Kerala. Oil prices fall below the $50 a barrel mark, extending the worst start to the year since 1991. Tony Fernandes will step down as the CEO of AirAsia for 2 months over alleged bribery allegations being probed by the Malaysian government. And in earnings, Bharti Airtel, Adani Ports and Titan are the three Nifty companies that will be reporting the third quarter numbers today. Mind you, it's a packed house when it comes to earnings at the broader end of the spectrum as well, and we'll get to that in a bit. But first, the trade setup for the day. The US market shrugged off the China fears and the coronavirus fears, and on an intraday basis bounced back and therefore ended at a level which was respectable and in the green. So if you just look at what the US markets did in the session, let's first start off with that. About 0.5% higher for the Dow Jones, Nasdaq about 1.34%. And you got to give credit to Tesla. I mean, that stock is just taking short sellers for a squeeze and therefore rising almost every single time. That's the nature of the move that we've seen in the stock price of Tesla. And it was up 20% in trade yesterday as well. Remember, this is a stock that has risen from levels of nearly $270 or $280 sometime middle last year to nearly 730 or thereabouts in the session end of yesterday. So it doesn't move the needle on the indices too much, but on sentiment certainly does. And that stock was up and active in the session yesterday. But the markets are doing reasonably okay too. Incidentally, in today's session, even the rest of the Asian pack and the Chinese markets are all doing reasonably okay. So you look at the Asian screen across and you will see a bit of green. Hang Seng up about 1%, Shanghai is up about 0.4%, Nikkei is up about 0.1% in trade. So the going is not bad as far as the rest of the world go, and the SGX Nifty indicates a start which is marginally in the green, but in the green nevertheless. To my mind, the key pivot today, though, is the Nifty Bank. We've seen some PSU banks, some large private sector banks underperform, and if indeed the sentiment around the world trades okay, then we might actually have a good trade in the Nifty Bank, which will be good, which will be crucial for the markets, because I may be wrong here, but I do believe that for the really expensive FMCG names, which got that budget booster shot of DDT and some other factors, it's difficult to see this rally sustain and take the indices even higher, because these stocks are terribly expensive. So they've done their bit on Saturday and Monday. They might still continue doing well, but I don't know how long can a rally like this sustain. So, and that's why I think the Nifty Bank, it's a pivot in the session today. Also, watch out that while the FIs continue to sell, because of the crude price dip and the sentiment thereof, as well as the fact that locals are continuing to buying, and we saw some buying in trade yesterday as well, about 1,200 crores. That might just sustain the sentiment. FIs continue to be net sellers, so 1,200 crores yesterday, 1,100 crores in Saturday, around 3,500 crores in Friday. But the DI buying support was evident yesterday. We spoke about it when we saw the high numbers as well. So it was very evident that DIs would have come and bought yesterday. The question is, can that sustain? My belief is that the sentiment could well be sustained as a result of that. Lots of things to watch out for in the run-up to the policy on Thursday. Lots of things to watch out for in the session. One, the key numbers that you watch out for. So Adani Port, SEZ, Bharti Airtel and Titan are the three index numbers that you monitor. And as I said, a clutch of very important broader end of the spectrum numbers. So TVS Motors, Piramal Enterprises, Adani Green, and the kind of move that this stock has had is quite exceptional. And we'll watch out for Avanti Feeds as well, off the highs, but still doing okay for itself. But the stocks that will likely react at 9 and 9:15 today, more importantly, well, a couple of specialty chemical companies, Deepak Nitrite, very strong performance both on a standalone or a consolidated basis. These are standalone numbers which are up, when the net profit was up 3.9 times. The the numbers were about 2.9 times, but still very strong. Not quite comparable, but still the phenol segment added to the top line growth from quarter 4 FY19 as well. So good numbers could react, as could SRF, because while the revenue numbers were flat, EBITDA margin was strong, and the net profit for the large company was up about 2.1 times, and therefore this is the other one in the specialty chemical space that I would watch out for. And I would watch out for Welspun Corp because the numbers seem very robust. Revenue is up 21%, net profit up 3.3 times, EBITDA up 92% as well. So really would going for Welspun Corp as well. They've lowered the debt, order book is very healthy. I would reckon that the market should take this well. Lastly, a couple of things. Was Manappuram Finance, Bearing India Private Equity Fund, is offering 4.2 crore shares, which is 5% of the company at a floor price of 172 rupees per share, which is a discount, of course. And remember, Bearing Fund has about 8.76% stake as per the latest exchange filing. So very strong stock, might have a technical trigger. The question is, can it get bought into? That's something that people will grapple with. So, but an important stock to monitor on open today. And I will watch out for cement stocks. Morgan Stanley, Goldman Sachs, everybody's reporting that there have been some price hikes across regions and particularly in South India as well. It'll be interesting to see what some of the cement names do. However, let's tell you what's lined up on First Word today, the collection of the top editorial stories that we bring to you. Yash First Johnson to tell us what Bloomberg's proprietary indicator, which is the RRG function, throws up about the Indian markets. Darshan then Johnson to do a status check of the 29 Nifty earnings that have come out with earnings thus far. While Somit takes us through what to expect from Airtel, which comes out with numbers. And then you go to Agam, who tells us why Titan may not have a great set of numbers to show for the third quarter. And then we get Yash back again to talk more about one of the specialty chemical companies, which is Deepak Nitrite's, the strong numbers in the third quarter. But let's start off with a market piece. Indian benchmarks traded in a narrow band on Monday, just marginally in the green. Better off though than the Asian peers like the Shanghai Composite, which of course ended the day with deep cuts and as it reacted to the coronavirus impact after a gap of 7 days. But a comparison of India's equity markets with the world MSCI index on the relative rotation graph, a proprietary Bloomberg indicator, shows that fortunes may be changing. Yash Upadhyay is here to tell us more. Yash, what is it that you're trying to tell us?
So no doomsday predictions at all. We are basically trying to show what the relative rotation graphs are indicating, and at the moment they are suggesting that we could see a period of underperformance from the Indian equity markets, and we are using the MSCI World Index as a benchmark or as a base for this purpose. And what we found is that the Indian index, and we are using the NSE 500 to get a broader picture. We've seen the broader markets also do well, but that is showing that the Indian markets have steadily lost the momentum. And as you could see, the Nifty 500, which is the index over here, that has gone down from the improving quadrant back into the lagging quadrant, which is the worst quadrant, by the way. But what is this quadrant, and how do you break up this indicator, and how do you analyze it? So basically what the RRG indicator does is that it analyzes the relative strength of a security against a benchmark and within itself as well. Now there are two parts to it, and let's break it up. On the x-axis is the RS momentum, which RS indicator, which shows the relative strength of the security against the benchmark, and on the y-axis is the RS momentum, and that is basically an indicator of the RS strength because it shows you the magnitude, or in technical terms, as the name says, the momentum of that trend. So while the RS indicator shows you whether a security is an uptrend or a downtrend, the momentum will show you whether it is moving up, the momentum is positive, or is it slowly receding or stalling, or the momentum is losing its strength, vice versa. Now what we've done is that we've looked at the individual sectors within the composition as well. But before I go across to that, we need to understand the four different quadrants as well. So at the top right, we have the leading quadrant, which is where both the momentum as well as the relative strength are positive. When is it positive? When the reading is both for both the quadrants in positive of 100. Well, then next comes is the weakening quadrant, where while the relative strength is positive, the momentum is coming off. Now that is an indication that while we are in an uptrend, that uptrend is slowly stalling or losing its power, and it's probably time to look at other sectors which might be doing well. Then comes the lagging indicator, which comes in the lowest left bottom, where both the momentum as well as the relative strength are negative, which indicates that the trend is consistently pushing downwards, and you probably need to stay away from it. And the last one is the improving quadrant, where the momentum has moved up, but the relative strength is still negative. As we know, as technical analysts look at, first is the momentum, because the momentum or the rate of change moves first, and then we see the trend reversal happening. So this gives you an idea that we might soon be looking at an uptrend coming in, and this is where you want to be, which is the improving quadrant. Now, having understood all these different quadrants, let's try and understand which are the sectors which are not doing well or which are doing well, and you have to look at them at the current juncture. So here is all the Nifty indices, and what we've observed, starting first with the improving quadrant, is the Nifty Private Bank Index and the Nifty Financial Services Index. These are the two in the pink color over here, and they have gone from the weakening quadrant, which was the worst quadrant, into the improving quadrant, which is suggesting that there is slowly and steadily momentum gathering, and we might see an uptrend resume as well, at least as far as these two are concerned. But what isn't doing well is the likes of the Nifty Auto Index, as well as the Nifty PSE Index, as well as the Nifty Energy Index, and the metals index as well. Look at how the metals index has done. It's gone from the best indicator, which was the leading indicator, and it's quickly drifted down and into the lagging quadrant. Similar is the case for the Nifty Private Index as well, public PSE Index as well as the Nifty Auto. Nifty Auto made a U-turn and it went back into the leading quadrant before its numbers, but then it has seen a sharp correction. So that is a suggestion that there is continued weakness, and whenever we see such kind of trends happening, that is an indication to stay away from that sector at the moment. But what is it that is looking well, apart from just the private banks and the financial services, is the IT index. So take a look at how the IT index has behaved, and the IT index is the one in the green line. It went from the weakening quadrant, and instead of making a full circle, it directly moved back into the leading quadrant and is inching higher. Now, what does it mean? That both the momentum as well as the relative strength are positive, and this is where most of the investors are looking as an area for flight of safety. We've seen some of the budget announcements also being positive for some of these IT names, and they're doing very well. So IT is one place where the strength as well as the momentum is extremely positive, along with the private sector banks as well as financial services.
Well, pretty interesting, the change in the quadrants for individual sectors. So if banks indeed do well, then you can probably also expect the larger caps to do well, and maybe which is why the Nifty 500 or the NSE 500 may not necessarily have the best momentum right now. Yash, thanks so much for putting that into perspective. That's the relative rotation graph. It's a proprietary Bloomberg terminal indicator, and the hit ratio is pretty good for specific indices and specific stocks. In this case around, we were pointing out the relativity of the NSE 500 index and the broader market stocks, and therefore the chart suggests that maybe there could be a period of slight underperformance for that space. Well, could earnings have led to it? Because we are halfway through the third quarter earnings season and the results have largely been in line with the analyst expectations. Darshan is standing by, as always, with a scorecard of the corporate earnings so far. Darshan, I believe what, 29 odd stocks?
Yeah, 29 have come in, so close to 60% of the earnings have already been out. So doesn't paint a very, very good picture. It's not bad, but it's not good either. So if you take a look at what's happened, I think majority of them have come out with inline set of numbers, and the companies that have come out with inline set of numbers have come down. But compared to last quarter, the number of strong have halved, and the number of companies that reported weak set of numbers, they have also moved up significantly. And even if you take a year-on-year comparison, the number of companies that were strong has come down, and the number of weak companies that have come out have actually gone up. So it's not been a very, very good quarter, majority of them. And even if it's an inline set of numbers, the internal somehow for a lot of these corporates actually managed to disappoint. So let's take a look at the heat map and the companies which managed to surprise or which actually didn't come out with numbers. I think IT as a pack, HCL Tech and Tech Mahindra were the two companies which managed to come out with better set of numbers, increased guidance here. Vedanta did well on the operational front. Bajaj Finance, as usual, continues to do well. Among the auto stocks, only Bajaj Auto and Dr. Reddy's on the pharma side did well. What didn't do well? The last quarter's outperformer, Tata Motors, and actually Tata Motors rallied 60-70% both the numbers. This time around, weak set of numbers. Maruti continues to disappoint. L&T, Kotak, is surprising to see Kotak among the weak set of numbers, and Reliance coming out with weak set of numbers. But apart from it, most of the other counters came out with probably inline set of numbers.
Okay, Darshan, now what about what are broad sectoral trends that are evident from these set of numbers thus far?
Yeah, so let's start with auto. Probably the recovery which everyone was anticipating didn't come in. If you're looking at it, Bajaj Auto was the only one that did well, and that also came on the back of strength in exports. So on the domestic front, there's nothing much happening. Maruti Suzuki, obviously the margins came in slightly lower because the sales and promotion expenses were much higher. And Tata Motors, both India and JLR, both of them disappointed in terms of their financials. So that's the auto number. On the cement number, Ultratech. Now, it was an inline set of numbers from Ultratech, but the counter did rally because of the commentary, which was extremely strong, and the sales volumes that came in, that also was pretty decent. So Ultratech managed to do well in terms of the stock price. The next one is basically L&T. L&T now misses the estimates but maintains guidance. The numbers were weak. The order book grew, but that came in at the cost of revenues. Now it will be a tall task for the company in the fourth quarter to maintain the guidance both on the revenue front as well as order inflow front. So on they managed to get in a lot of orders, but somehow that didn't convert in terms of the revenues. That was L&T, only the stock in the infra space. There is consumer. I think if you're looking at it, the volume growth was pretty decent across the board for all the FMCG companies. But I think the only point that disappointed while numbers were in line was that the management commentary was extremely weak, and you know, they didn't say much on the rural demand. Like HUL on a consistent basis has been on the rural side, has been growing almost 1.2 to 1.5 times the urban growth. This time around it was half times of that, and the management commentary was extremely weak. So FMCG, the commentary was weak. A mixed bag for the oil marketing companies and the oil sector as such. Reliance, Jio and Petchem business, all of them disappointed. So Jio this time around, Reliance this time around was a weak set of numbers. Inventory gains, strong sales volume, and Petchem came out with decent set of numbers from Indian Oil. Wasn't a blockbuster number, but inline set of numbers. The next sector that we want to talk about is the financial. I think the NBFCs, HDFC, Bajaj Finance managed to do much better than the banks. The big problem was the asset quality, which probably was under stress, and slippages was much higher from all these banks, and provisioning also went up significantly. Most of the banks reported weak loan growth, be it a Kotak or an IndusInd Bank. The loan growth was extremely weak, and most of them corrected significantly. Even HDFC Bank corrected significantly. On the IT front, it was a mixed bag. You know, while the smaller ones like a Techem and HCL Tech did well, TCS this time around, there was a revenue degrowth that was seen on the BFSI side and the American markets. Infosys, I think the commentary was decent, double-digit US growth, European growth. So Infosys was in line. HCL Tech did manage to do well. Wipro, I think, has been facing issues on cost pressures, and that is why they have been underperforming the other three large companies on the IT front. The next sector that we want to talk about is Z. Nothing much to talk about. Ad revenue was weak, costs were much higher. There were issues as far as the balance sheet was concerned, promoter issues. So Z, over and out, not very good set of numbers. A couple of other sectors that we would want to highlight. Metals, extremely weak set of numbers from JSW Steel. Steel realizations were much lower. Interesting to see how Tata will react. Vedanta, margins were aided by lower input costs. So Vedanta was a decent number this time. Financials, gross margins improved for Dr. Reddy's. The commentary was extremely strong. Generics and PSAI numbers also added. So Dr. Reddy's over and out was a very strong set of numbers. And finally, Bharti Infratel in line, higher exit charges were seen, and higher energy spreads impacted the numbers, but overall it was an inline set of numbers.
And we'll hear from Airtel today, so that's the other important one. 3 more companies will report numbers, but Darshan, thanks so much for putting that into perspective. So earnings season more than halfway done, and it's looking, well, largely in line with estimates, maybe with some disappointments increasing over the last quarter. Compared to the last quarter, I mean. But speaking of Bharti Airtel, the losses are expected to narrow in the December quarter, and both India and Africa businesses are likely to play their parts. Samit is standing by with the expectations. Samit, what should one anticipate?
Well, the Africa business has actually played its part. If you see the Airtel Africa number, which were very strong in the third quarter of financial year 2020, with 8 consecutive quarters of double-digit constant currency growth, and EBITDA for the Airtel Africa business was at an all-time high. So all focus on Bharti Airtel numbers which will be coming out today will be on the India mobile business and the ARPU number that comes in. So I'll first start off with the consolidated numbers of Bharti Airtel. Now, if you see compared to last quarter, the revenues are expected to be higher by 3.3%. EBITDA is expected to be higher by nearly 2%. Margins are expected to contract marginally to around 41.3%, while the net loss number is expected to narrow at around 791 crore rupees. The average revenue per user number, this is the ARPU number, and the key number for the India mobile business, that is expected to be higher by 4% to close to 133 rupees per user per month. Now, the India mobile revenues are expected to bounce back after a seasonally weak second quarter of financial year 2020. Strong broadband additions, resumption of services in Jammu and Kashmir and other parts of the country which were impacted due to floods in the second quarter, quarter, and some benefits of tariff hikes announced in December 2019 will aid the India mobile revenue and the ARPU number. However, some of these positives will be offset by lower interconnect usage charge revenue due to changing call symmetry trends that we have witnessed in the third quarter of financial year 2020. Now, there were some one-off provisions that were done by Airtel in the second quarter, and absence of these provisions in the third quarter and some higher marketing expense in the third quarter will impact the margins marginally. Now, the marketing cost is expected to be higher compared to last quarter, and that is because of the Airtel Extreme launch that we had seen. Now, the India mobile subscriber base, that is also expected to be higher compared to last quarter. Not a big addition, but some addition that we had seen, that is around 28.2 crore as compared to 27.9 crore reported in the second quarter of financial year 2020. Now, since the new tariff was applicable only for those prepaid customers whose validity ends in December 2019, the ARPU growth is expected to be limited, and in fact the entire benefit of this tariff hikes would be visible only in the fourth quarter of financial year 2020 and in the first quarter of financial year 2020. Now, for the other businesses of Bharti Airtel, the DTH business is expected to do well, while the enterprise and the broadband business could see some moderations compared to last quarter, and that is because of the renewed competitive pressure coming in from Reliance Jio. Lastly, key things to watch out for from Bharti Airtel earnings would be any capital raising plans of the company, if any, the capital expenditure and network expansion plans, management commentary on AGR dues, floor pricing proposal and participation in auction, and lastly any commentary on the strategy to increase market share going forward would be important to watch out for from Bharti Airtel earnings today.
Okay, we'll watch out for the big boy from the telecom space. The stock has been on a roll, was up about 2.5% yesterday as well. So it'll be interesting to see whether the numbers live up to the expectations or no. As also the case with Titan, a sharp rise in gold prices may have capped the sales for Tanishq. It may still be Titan's savior in the third quarter, with all the other sectors underperforming. Agam is here for more. Agam, we go back to jewelry for Titan.
Yeah, you know, Neeraj, the Q1 and Q2 weren't that great for Titan, but I reckon there'll be some respite because of the wedding season, the festive season. So in terms of expectations, what we are looking at is, well, a 10% growth in the top line, and this will be largely aided by the jewelry segment. We're expecting a little bit of an expansion in operating margins as well, expected to come in at around 11.5% versus 10.3%, and profits expected to grow by around 22%, but that will largely be on account of, well, the gains as far as your taxation is concerned as well. Now, coming down to jewelry segment, which contributes to as much as 80% of the overall revenues, as the management has already indicated in the quarterly update, suggesting that they're looking at 11% growth in the jewelry business, and this will be well within the guided range of 11 to 13% according to the management. Of course, it is essentially the wedding and the festive season which will come and aid the growth coming in this particular quarter, and this is following a flat growth in Q2 for jewelry segment. So this is going to be a better one. And well, moving on, surge in gold prices, however, have kept a lot of well, investors as well as well, customers at bay, but it's still supposed to be a better quarter. Let's move on to the next segment, watches. While after a very strong growth seen in the previous couple of quarters, we're likely to see a weak consumer sentiment, which is why we're expecting flat growth for the watches segment. And eyewear, again, is the other one where we've seen robust growth over the last few quarters, but this time around there could be some slackness. Of course, watches will be another important sector, considering 17% of Titan's revenues come from there. On the whole, Neeraj, no fireworks expected, but the wedding season and the festive season will certainly come and aid a growth for Titan this time around.
Suffice to say, it's not been a very great year, but quarter three might just be better than the previous two.
Yeah.
Great, Agam. Thanks so much for putting that into perspective. But if it was a mildly lackluster year for Titan, nothing like that for Deepak Nitrite, because that was a set of earnings that took the street by surprise. Not because of the strength of the numbers, but because of the extent of the strength, I reckon. The profit grew nearly 4 times for Deepak Nitrite in quarter three, and aided by almost all of the divisions. The chemical maker also saw a substantial jump in margins. Yash is back with us to tell us about what worked for Deepak Nitrite this time around. Yash, it was expected to be a good quarter. The extent of the outperformance, was that a surprise?
Absolutely, Neeraj, because almost all of the segments, they have done exceptionally well, both on a year-on-year basis as well as quarter-on-quarter, with the one exception of the performance products business. But that had done exceptionally well in the previous quarter, which was the second quarter. And on that high base, we saw some amount of correction on a quarter-on-quarter basis. But year-on-year, almost all of the segments, they have done exceptionally well. Quickly run you through the headline numbers. Their revenues grew 46% on a year-on-year basis, coming at about 1,120 crores. 250 crores was their EBITDA, which was up 2.4 times. Margins have gone up by almost 10 percentage points to 23% from 14.1%, and net profit, like you mentioned, had gone up by 4 times. However, this is down to the fact that they have been reporting their phenolics business, which is the subsidiary Deepak Phenolics, from the fourth quarter of FY19, and because of that, the numbers on a YOY basis may not be exactly comparable. They started operations of their phenol business in November of 2018. There were some issues when it started, and we only had about 1.5 or 2 months of the phenol business in the third quarter of FY19. So that's the reason why the base might not be exactly or directly comparable. But what's done extremely well, all of the sectors performing on a YOY basis, some moderation seen in the performance products business on a year-on-year basis. So take a look at the basic chemicals business. That posted a 15.5% growth, along with the fine specialty chemical business, which saw a 17% growth. Performance products business reported the highest growth of 77% on a year-on-year basis, but on a quarter-on-quarter basis, there was a moderation of almost 17% there for the company. Now, in terms of individual factors, basic chemicals did well because of the higher volumes that the company reported in the third quarter. Fine and specialty chemical business saw higher margins as well on the back of their improved product mix and higher exports. Now, exports does not contribute a whole lot. It is fairly split between domestic and exports, but exports saw a significant jump of almost 60% year-on-year, and that is largely because of the fine and specialty business. Performance product business, again, their fluorescent whitening agents as well as the Dashda, these two products, they are doing very well. Last quarter too, they had reported a strong growth, and this time too, we are seeing that business do very well. And Phenolics business is operating at 100% plus capacity utilization and posted a 23% growth on a year-on-year basis. That's not stopping the company though. They have said that they are going to go ahead with their expansion plan, and they have bought a new land in Dahej for a total investment of about 99 crore rupees. Now, this land will be used, the company says, for their future expansion plans, but brokerage reports suggest that it would be largely aimed towards the fine and specialty chemicals business. Take a look at how the stock has done and the analyst recommendation. The last 12-month returns for Deepak Nitrite have been upwards of 81%, and still all the 7 analysts tracking the stock have a buy rating on it. The return potential too, despite of its run-up in yesterday's day of trade by over 8%, suggests that it could go further up by almost 10%. So across the board, strong performance. Analysts continue to remain positive, and still further upside seen in the counter, Neeraj.
Yeah, and the valuations don't seem to be too demanding either. 428 crores for 9 months, which means that if it continues on the current run rate, it could touch about 550 odd crores.
That's right.
On a market cap of what, 5,500, 6,000 crores,
6,000.
which is about 10 times the current year earnings. That's not expensive either. Yash, thanks so much for putting that into perspective. So Deepak Nitrite, nothing to take away from this one, but SRF came out with a good performance too, so do watch out for both of those names. Specialty chemical companies, save for Vinati Organics, seem to have hit the right note in this quarter. That's all that we have on First Word today though, but lots more lined up on Indian Open. Pasupati Godwani of Global Fourier Johnson to talk about how is he trading and investing post the budget. We talk about Chalet Hotels' latest acquisitions with Managing Director Sanjay Sethi. Ask Prashant Tripathi of Max Life Insurance what budget announcements mean for insurers, and decode earnings with Kulin Lalbhai of Arvind. But after this break, a full tilt towards the day's trade.